Days after the International Monetary Fund or the IMF cut India's gross domestic product or GDP growth forecast for the current financial year to 5.9% from 6.1% earlier, a Reserve Bank of India report has said that the multilateral body might encounter forecast errors as there could be positive surprises on the growth front. The State of the Economy report for April, authored by RBI staffers, including the Deputy Governor in charge of monetary policy, also said that India Inc.'s profits had moderated after a robust 2021-2022, but remained healthy despite multiple challenges, and that, and I'm quoting here, that this might provide a fill-up for the much-awaited revival in the corporate capex cycle in 23-24. Signs of an upturn are becoming evident in industries such as cement, steel, oil and gas, textiles and data centers, to name a few early birds, it said. The report also goes on to say that although it's too early to tell, most recent data arrivals suggest that multilateral institutions, the IMF in particular, might encounter forecast errors, with actual outcomes surprising them positively, it said. The report noted that the downcasting of growth for India was in line with the lowering of global growth projections as well as those for emerging market and developing economies. The RBI maintains that the views expressed in this article were those of the authors. It does not represent the views of the central bank per se. Remember, the IMF had cut the GDP for the year to 5.9. The chief economist of the IMF, Pierre-Olivier Gourinchas, said that while the global economy's gradual recovery is on track, the recent banking instability has also highlighted fragilities in the rebound story. So, on left, right and centre, days after the RBI raised its growth forecast, the IMF has cut its GDP growth forecast for India for the financial year 2023-24 by 20 basis points to 5.9%. The fresh revision in the growth forecast by the Washington-based multilateral body in its latest biannual World Economic Outlook is broadly in line with what other multilateral agencies and economists have projected, and it is sharply lower than the RBI's projection of 6.5%. So we're asking today, India's growth numbers, is it off the charts or is it off the mark? Joining us on left, right and centre, Shehzad Poonawalla, spokesperson of the BJP, Salman Soz, spokesperson of the Congress, Professor Santosh Mehrotra, an economist, a visiting professor at the Centre for Development at the University of Bath in the UK, a research fellow at ISA, the Institute of Labour Economics in Bonn, and a former professor of economics at JNU. And we also have Rajat Sethi, also an economist, joining us on the show. So, Professor Mehrotra, to you first. So, this report from the RBI says that the IMF is likely to have erred on India's growth forecast, says this RBI paper, that the actual outcomes may surprise everyone and the IMF included. Your reaction?
Well, let's not call this the RBI report, because it's a paper by a staff member or set of staff members in the RBI. So it's not an official questioning of the IMF projections.
Includes the Deputy Governor in charge of monetary policy, doesn't it?
Fair enough.
Mr. Patra?
Fair enough. That's okay. Bottom line still remains that there is a question mark about consumption. And the question mark about private final consumption expenditure is shown up by the second revised estimates of the Central Statistical Organization of the Indian government. I'm looking at it right now. So the weakest part of our sort of estimates of the composition of our GDP remain final consumption expenditure, and that is because jobs are not growing. Now, the government may continue to pretend as long as it wishes to that jobs are doing brilliantly, when in fact they are not, because the CSO says that in 2021, final consumption expenditure was 61.3% of GDP. It was 61.1% of GDP in 21-22. And in 22-23, it was 60.5. In other words, it's actually lower. So, I mean, per capita, it's actually likely to be not much different. Why should we be surprised? Joblessness is high, wages have been falling or they've been stagnant. and inflation rates are high. So if the IMF is sort of downgrading, second reason that the IMF is saying what it is saying is because there are external conditions which are an issue, and it's perfectly possible. I mean, we're not privy to the modeling done by the IMF, nor are we privy to the modeling exercise of the RBI. So the bottom line is that external conditions might be being underestimated in the RBI and might be more accurate given where the IMF people are sitting in Washington, D.C. So we'll wait to see. I mean, my bet is that it's actually the growth rate in FY24 is unlikely to be more than 6.
Okay, so why should we be surprised given joblessness and given the inflation that we're seeing, Rajat Sethi? There are 3 global agencies. It's not just the IMF, they're also the World Bank, the UN. They've all lowered their forecast on India's growth in the current financial year. Could they all be erring? Mr. Sethi, you just have to unmute.
Yeah, sorry. Sarah, if you look at all the global institutions around the world, they piggyback on the data which is provided by the government, by respective countries of respective countries. So there are those factors which are relayed through our own data, which reaches these global bodies. Along with that, they have an overview of which way the global economy is going. So the global economy, which is the external factors, remain a very important sort of parameter on which IMF has cut down the growth forecast.
Correct.
They have also cut down on the global growth forecast as well. So I think it is largely in tune with that. Two independent institutions like the IMF and RBI don't quarrel over predictions. Okay, they predicate the predictions on certain assumptions. We have to go by their version as well as the RBI's version. This is all ultimately predictions. What RBI is saying in its report, in the State of the Economy report, which is far more important, is that the headline inflation number, the CPI retail inflation number, has tempered down to 5.8%, and it is well on the trajectory to reach to a 5%. Remember, if the inflation number tempers down in an election year, provides enough elbow room for both fiscal policy and the monetary policy to focus on the growth numbers of the economy. And I think if you look at all the other parameters that are out there, barring the El Nino impact, which might unleash heat waves and lesser monsoon, barring that factor, everything else is working in India's economy's favor. So I think what the RBI's paper is predicating its response on is largely based on the PMI numbers, the private investment picking up, the huge outlay of capital expenditures that the government of India has kept aside the budget this year. So keeping all of these things, RBI feels that achieving 6.4% is certainly not going to be difficult in the coming year.
Okay, but I just want to clarify. You said the IMF, these international agencies, they piggyback on data provided by the government,
Certainly.
so that would then add legitimacy to their findings, right?
Yeah, but then they mix it with their own global perspective they get their own numbers on how is the growth picking up in the other Western economies, because our exports are going to rely upon the demand of those goods in these Western countries. So they sort of temper those data points depending on what figures they're getting on the world economy numbers.
Okay, let's get in our politicians, our spokesperson for the Congress and the BJP. Salman Soz, to you first. On the 11th of April, the IMF had trimmed its GDP growth forecast by 20 basis points to 5.9. And for the financial year 2025 by 50 basis points. Either ways, it is much lower than the RBI's projection of 6.5 for 2024.
Sarah, thank you for having me. Now, I'm really surprised that we're debating IMF's projections, which may have been cut by 0.3 of a percentage point or 0.4 of a percentage point. I think the much bigger picture is that the Indian economy has been in deep trouble since demonetization, and it continues to be in trouble. And obviously, the COVID-19 impact has made it much worse. But I want to remind our viewers and your viewers about those good old times when before Prime Minister Modi became Prime Minister, he and the late Finance Minister Arun Jaitley used to talk about how India would grow at 8 to 10% if the BJP came to power. In February of 2015, Jaitley ji said that India's economy needs to reach an annual growth rate of 9 to 10%. These are his words. And then sustain that activity many, many more years than 10 years in order to improve infrastructure and bring down rampant poverty. These are Jaitley ji's words in 2015. And here we are in 2023 talking about whether growth is going to be 5.9% or 6.3%. Now, what is BJP's record? That I think ultimately that is what it is, right? We have to get to the BJP's record. The BJP's record in these 9 years, let me take Dr. Manmohan Singh's 10 years and the average growth rate, despite the government actually cutting down growth estimates for those years, was about 7% on average per year. And in the 9 years of Modi magic, the growth rate is averaging about 5.5%. That means Dr. Singh's growth rate of India under Dr. Singh, was about 25% more than the years of Modi magic. Now, why is this happening? And why are we talking about growth when we're not talking about the biggest issue in the country? And that is employment, or the lack of employment. If you look at labor force participation in India, which basically means taking all those people who are employed and all those people who are looking for jobs, it's less than 40%. In China, the comparable ratio is 60%. And this has been the case for many, many years. And nobody in the BJP or the Modi government is prepared to talk about when employment is going to pick up. Without employment, you will keep seeing what Mr. Mehrotra was saying, that consumption is weak, and we know this. And by the way, in 2017-18, there was a report which was suppressed by the government, which basically said that consumption declined. That means poverty increased between 2011-12 and 2017-18. That is the first time something like that happened in India in decades. So, okay. And what is happening to the economy now? Now, people will say lots of things about the economy now. Consumer demand, which is the biggest part, the consumption is the biggest part of the economy, right? Mm-hmm. If you want to get a sense of how weak the economy is, let's look at scooter sales or two-wheeler sales. This is a good indication of demand at not the higher income level.
Not luxury cars versus
not luxury cars. Not even cars. Just two-wheelers. In 2018-19, 24.5 million units were sold in India and abroad. This is exports and domestic together. In 2021-22, it was only 17.9 million. In the first 10 months of 22-23, it was only 16.6 million units. That's where consumer demand is. Now, a final point for you to consider, your viewers to consider. From the time that Prime Minister Modi became candidate Modi for Prime Ministership for the BJP in 2013, Mr. Gautam Adani, who owns NDTV, his net worth was $1.9 billion, and by 2022, it had gone up to about $137 billion. That means 70 times rise in net worth. During that same time, for the average Indian, the per capita GDP grew by only 1.5 times. And if you take Mr. Adani out of the equation, then it would be even less. India, for most Indians, 95, 96, 97% of the Indians thinks are not good.
Okay. Let's bring in Shehzad Poonawalla.
Things seem to be doing rather well, swimmingly for the wealthiest Indians.
Okay. Shehzad, the point here, many points being raised. The basic point is, it's ironic to be nitpicking at whether we're at 6.5% growth or 5.9% growth when we should really be stepping back and looking at the big picture, that we've gone from where we were talking expectations of 9% growth, 8% growth to the mid 5% growth.
Sarah, first of all, I would hope that you would indulge me in the same way you've indulged Professor Mehrotra and Salman Soz, and I would get an uninterrupted...
Everybody has been given time. We have the time, but really you've lost about 30-40 seconds of your own time with this start.
Perhaps you would not have interrupted me.
I'm sure you have a better way to start off your argument, Shehzad. Come on.
Sarah, I need to put that disclaimer because I understand the disposition sometimes these debates can take, and I hope you won't interrupt me. You'll give me an opportunity to answer.
I hope you start with your response.
Sarah, I don't need to be patronized by you. Thank you. Now, first of all, 2 months ago, the IMF had pegged India's growth rate at about 6.1%, and now they have reduced it by 20 basis points. But even then, they are continuing to hold one thing as true, which is that India remains the fastest growing largest economy. And if you see the World Bank's report, it pegs it at 6.3% and ADB pegs it at 6.4%. But I don't want to get into that because I think that's a no-starter of a debate. Let's look at the larger picture, as Salman Soz said. We were at 11th position under Prime Minister Manmohan Singh, a very educated economist. Today we are at 5th largest position. The fact of the matter is that the average annual inflation under Dr. Manmohan Singh was 8.5%. Today the average annual inflation is about 4.5-5%, despite the fact that we had two global challenges, including the COVID pandemic and a supply chain constraint caused by the Ukraine-Russia crisis. And between 2012 to 14, in fact, the inflation was double digit. It used to hover around 10 to 11%. So whatever growth rates that were being achieved, in reality, it was negative because the inflation was taking a toll. The per capita income in this country over the last 8.5-9 years has doubled. The fact is that the number of taxpayers have doubled. For the last 24 months, our GST collections have been above 1 lakh crores. The Economic Survey of India, which was tabled in January, February, says that our domestic demand, our urban and rural demand, our capital formation, our capacity utilization and private consumption all are up. Now let me give you some hard data because I don't believe in voodoo economics, I believe in data. Our forex reserves in 2014 were $250 billion. Today it's at 586. Our exports have grown to $700 billion in the last 2 years. Despite the COVID pandemic, it has grown by $100 billion. Our FDI grew from $40 to $45 billion in 2013-14 to $83 to $84 billion this year, last year. Our inflation has halved at the time when we are facing these challenges. And inflation, in fact, if you see just last month, has come down to 5.5 or 5.6%. It's below 6%. Even the IMF pegs it at 4.9% in the next fiscal. The fact of the matter is that, look, this is happening at a time when we have taken people out of a poverty at the rate of 11.9% each year from 2016 to 2021. The UPA did it at an about 8.5 to 8.9%. That means we've lifted 14 crore people out of poverty, and that has happened primarily because, Sarah, we invested 90 lakh crores in social sector spending and developmental spending over the last 8 years. The UPA spent 49 lakh crores as per the RBI data in 10 years on social sector and on developmental expenditure. And the fact of the matter is, what affects the Aam Aadmi? Let's take, for instance, prices of everyday things. Rice. Between 2004 to 14, rice prices grew at 149%. Today it's grown at 37%. Wheat grew at 176%. Today it's grown at 36%. Atta grew at 170%. This is all Salman Soz's economics and economists that were handling the economy. Today it's grown at 43%. Sugar rose at 481% during 2004 to 14. Today it's grown at 10%. And therefore, this is the way the economy is. And if it wasn't, then in 2022 December, the World Bank wouldn't say, and I quote, India is better positioned to navigate global headwinds. I quote April 2022 statement of IMF's Kristalina Georgieva that she praised India's resilient economy. Bob Sternfels of McKinsey in September 2022 said that this would be India's century, not just India's decade. April 2023, India's
Shehzad,
IMF said,
since you are quoting the IMF and the World Bank, are we in agreement? So you are not disputing the IMF's findings, or you are? In this case,
I am saying,
as the RBI paper reporters,
I am saying that irrespective of whether the IMF says 10 points up or 10 points down, the larger trajectory of the Indian economy is that we have gone from strength to strength. And may I just add on employment, because a lot is said and there's a perception that the BJP doesn't want to answer this. May I just quickly take 20 seconds to answer this question about the employment situation in the country, please? If you may give me an opportunity.
Please go ahead.
Yes. As per the EPFO, and I know they will not consider the EPFO data, but I'm talking about the registrations that were done. Now, they will say that this includes formalization, not just new jobs, but a majority of this are people between 18 to 25 who are registering for the first time. This means these are jobs that have been created for the first time and they are registering. 5.28 crore subscribers were added. Every month after April 2022, 15 to 16 lakh subscribers, the majority of which are in the age group of 18 to 25, have been added. By the way, we had only 4 unicorns in 2014. 2014. Today we have 100 plus unicorns. We had only
Okay.
700
So there's
startups.
so
Today
much.
we have
This is an
86,000
overdose
startups,
of
and therefore
information, and we
23
can do
lakh jobs have been
separate
created
stories.
by
Hold
startups
that
itself.
thought, Shehzad. You know, we can do separate stories on
Yes.
whether the unicorn story is real, data, myth, etc. All of that. I want to just go back to our topic. We are really talking about this discrepancy between what the IMF is saying and what this RBI report or this RBI paper is saying. So I want to ask both our economists here, Professor Mehrotra and Rajat Sethi, both to you, do we have an endemic problem really where you have the government somehow, you know, systematically exaggerates growth prospects at the start of the year and then it kind of quietly, it kind of gets downgraded, right? I'm just going to say in March 2022, the government said India's GDP growth would be 8.5. It's now expected to come in at 7. In March 2021, they said GDP would be 11%. It came in at 8.7. Now the government can claim there were COVID-related distortions, which there were, of course. But look at the year before COVID. 2018, it was said GDP would grow at 7%. It came in at 6%. I'm just asking you as economists, because we, the lay people, I mean, we just see these big figures. We see the headlines. And in the end, at the end of the year, maybe the new growth figures aren't getting that kind of coverage. Professor Mehrotra and then Rajat Sethi.
Sarah, I'd really wish if most journalists would not get so carried away by growth numbers and they would focus a little bit more on the lives of people. If you keep getting carried away with numbers of growth, then you are buying into the government's narrative about $5 trillion economy hum ho jane wale hain, or UP is becoming a $1 trillion economy in the next 5 years. Why do you think these numbers are touted? The reason why these numbers are touted is precisely because they want to take attention away from the crisis in employment. Now, let me deal with my good friend Mr. Poonawala's EPFO numbers. New registrations indeed are rising. But that doesn't tell you anything, or he doesn't tell you that those numbers at the end of the financial year are actually revised and revised multiple times over and revised downwards. So no, there's no such thing as really. Even the EPFO doesn't believe its own EPFO numbers, because all it is telling you is a certain degree of formalization is taking place. Very good, very nice. But there is no one who studies employment, and this is my bread and butter. We know that new registrations don't add up to new jobs because there are millions of people who are also leaving the EPFO. There are the government organization which collects and puts this out itself keeps revising it. So I've written endlessly about this.
Okay.
So let's not even go there. Let's not even go there. On poverty,
Okay.
may I? Sorry, I didn't interrupt you.
I am not
Shehzad,
asking you.
Shehzad,
You don't
hold
need
that
to lose
thought.
your. You don't
Shehzad,
need.
please hold that thought. We're going to
Sarah,
go to
but
Professor
there's
Mehrotra.
no room for
and then we'll go to
for
Rajat
being so
Sethi and then to
arrogant
you.
and haughty. Let's
Nobody
be
is
clear.
being
I'm
arrogant
being
or haughty,
respectful.
but you are
I'm not
interrupting
being
the
personal.
No,
panelists.
Mr. Mehrotra
You're
can't
interrupting the
scream on me.
panelists. Please let
Sarah,
him finish.
Mr. Mehrotra
Shehzad.
should mind his tenor.
Shehzad, please
He should mind
let
his
him
tenor.
finish. You will get a turn.
Sarah, that's
let
fine.
Rajat Sethi speak.
You can give me my turn. You can keep the turn. But Mr. Mehrotra must mind his manners towards me. I have not said anything.
Can we
I
please
pointed
stick to
out.
the
I
facts?
wanted
We
to
want to
respond.
talk. Let's not do
He
a
need not
disservice
shout at
to
me.
our
I'm
audience
not
by
here to
going
be
into this,
patronized and
whether
shouted
someone is
upon. Let's
talking
get that clear.
patronizingly or not.
Yeah.
The whole
Let's
point
get it
of
All
clear.
right,
Let's
please,
have
let
a
Mr.
respectful
Professor
conversation.
Mehrotra finish, please, Shehzad.
Interrupt.
Let's have
so
a respectful
substantive point
conversation.
is not being,
I am being
not
respectful.
made.
Shehzad,
I expect
please.
respect in return.
Again,
Shehzad.
Yes. Let's
Please.
be respectful, Sarah. I'm not here to be shouted upon
Be
by
respectful
any
and
has-been
Shehzad, please
journalist
let
or
him
has-been
finish and then
economist.
take him
Let's be
on
clear.
the facts and figures.
Yeah, let's discuss on that. I'm ready to respond, but I'm not going to
Can
be
we
shouted
please
down
let the
upon by
panelists
anybody.
put across their
Let's
points
be
of
clear
view,
about
Shehzad?
that.
I'm going to have
Sir,
to turn down your
may I?
audio.
That's fine.
And
You
let
are
are you
someone
going
else
to
what
go
you
speak.
want.
on and on?
All right, Professor Mehrotra, please.
Can he behave
Carry
like
on.
a professor rather than be
Please.
snide?
All right, can we
Thank
turn
you.
down the audio of Shehzad and Professor Mehrotra?
Thank
Let's give
you.
Rajat Sethi a turn then.
Poverty.
So, Sarah,
Hold
you
on,
asked
Professor Mehrotra, just hold that thought. Let's get Rajat Sethi in, please.
Sarah, you asked a very pointed question. I thought that Professor Saab would answer that, but let me answer that on your behalf. For past three financial years, 2021-2022, government's own data claimed a growth number of 8.7%, which was later on, based on the revised estimates, was pegged at 9.1%. So this is an upward revision post facto once the data came in. Again, in 2020-2021, when the COVID had hit in, government's own numbers, which was put out, was that the GDP is going to contract by 6.6%. The actual contraction was only 5.8%. Again, in 2019-2022, I'm just going backwards in history, government claimed that the GDP is going to grow at 3.7%, but it actually grew at around 3.9%. So this is not true. There are professionals who are out there who are answerable to their own sort of education or their own qualification. They don't just nix or come out with numbers wherein they're just throwing out anything for public consumption or for political gains. This is a serious sort of an affair. There is a reason why the current sitting governor of RBI, Mr. Shaktikant Das, has been given the title of the Governor of the Year amongst all the other central bankers around the world. I mean, he would have done something better than his peers would have done.
Well, we have done a full, how many minutes have we done on this? A full, more than 25 minutes, if close to 30 minutes on this show. We're completely out of time. Thank you all for joining us. In the end, all I can say is for the Aam Aadmi, we're being thrown facts and figures and numbers and reports and papers from all sides. There's a complete overload. In the end, we can only look back and ask ourselves, were we better off today than we were before? Thank you all for joining us on Left, Right and Centre.